Hey traders, Parker here with just a look at the market, and this is what we did today. You can see I made a couple of changes to the actual indicator. I called it the RRG rotation, well, sector rotation indicator. And you can see how we did today. You can see the S&P 500 futures. All of these are going to be futures up here, and you can see we're up point zero. I mean 0.1% for the S&P 5 for the SPY, and then you have the Nasdaq, the Dow, and then you have the Russell. The Russell did pretty good today overall over the SPY and the NQ and the Dow. And then you have the VIX also retreated as well. Our leader for the day is XRE. You can see it right here, and this is the line for the actual leader, or at least the benchmark line for the leader. For the sectors, laggard today was XLY. It was actually down 1.5%, and you can see these are in the leading category, and this is just for today. We can look at it. I want to also look at it from a standpoint of where we are from the beginning of the year as well. And you can see technology is at number 10, and then XLRE, and then you can see all this information from the different sectors for today. And we're going to switch it over to where is it? We're going to switch it over to our anchor, and I have an anchor for the first day of the year, so 2026 month, and then the second is first day of the year. We have our additional ETFs on, and we should get a good glimpse of what happened for the what's been going on since the beginning of the year. You can see our leader is XLE still for the year. It's actually pulled back some, and you can see the S&P 500 is at 3.91%. Same thing here on label. So, but you can see for the S&P 500, our benchmark, and you can see everything's below this yellow line. Bitcoin, XRT, IGV, all these are below the S&P 500. Then you have everything above. The VIX is still high. It's actually up for the year 59.67% from the start of the year. You can see our laggers XLF, our leader, our leading, our weakening, lagging, improving, nothing in weakening, nothing in improving. And you can see this is what we've done basically for the whole entire year. You can see right here when it comes to our score, the score is 0. The score just tell you whether it would be risk on, risk off. But right now we're seeing a neutral. Cyclical is defense, growth, Bitcoin, gold, and you can see all these different things. This is within our RRG. I'm just going to call my sector rotation indicator, and this gives you a good clean view of the market on a percent change basis, and using S&P 500 as our benchmark. So I'm going to switch it over to this is the E-mini futures S&P 500, and this is basically what we've done for today. I'm going to remove my lines, but you can see where I've had plotted out different support areas for the S&P 500. You can see my first support area was right here where we had this double bottom right here from, what is this, October, and then a bottom again in November. Then we had this push, and you can see when we come over here, we zoom in, it kind of served as a support initially when it first tapped down here and here, but this big red line right here is the 200-day moving average right there, and you can see it hit it right there as well, but it couldn't hold it. And we got this big push right here. You see why we had this big push on this day right here, 331, the end of the month. And you see right now we're trading this black square, this black cloud right here is telling that we're trading within our previous month high-low levels. That's what PMH means, PML. And then we also have an inside week, so we're also trading within our previous week level. That's what this gray box is right here. And you can see from here, we got two signals. We have this signal is cyan or blue triangle down here. So we made a lower low but a higher close on greater volume than the previous candle. We did the same thing today. Today. And you can see for the futures it already restarted and made a new candle for tomorrow. But this is what I had on the S&P 500. We're going to look at it from one more perspective. I'm going to remove my drawings. And like I said before, it did come down here and hit this support area that I found here. Back here, what is that? No, that's August. In August, it made those support areas right there. I'm going to remove the drawing so we can see it a little more clear. The other thing I have on this chart is 200-day moving average. That's what this big red line is. These clouds represents, the bottom of this cloud represents 21-day moving average, 42. Above this one's a 42-day moving average. Then the bottom of this one's a 63. And then the other one is my 84-day move average, and I always they are all on simple. And this blue cyan line right here just represents a 10-day move average right here, and we're actually above our 10-day move average right here. So let's look at it from a different perspective, where we got the label saying inside week and inside month. So let's look at it from a different perspective on seasonality. I'm gonna pull this down. I'm going to push up my seasonality indicator. And I'm just waiting for it to load up. Was that the wrong one? That was a percent change one. Seasonality. And I'm going to zoom out, and I'm looking at this on a 10-year basis, and it says month is the month for. I meant to update that so it actually says March instead of the number for the month. And these gray boxes right here, they represent the Fibonacci levels. I guess whatever's going on with the futures is acting up. It wasn't doing this earlier, but this is the seasonality indicator. The gray boxes represents the Fibonacci level, so this would be 100, this would be 0, this would be 21.4. That's what I use. 38.2, the halfway mark. Then 60, 61.8, 78.2. So our 52-week high, our 52-week low, and our expectation for the month for the month of April. If I come over here, 1.9% up. And right now we're actually up 0.6% versus the expectation 1.9%. April is usually a bullish month for the S&P 500, or at least the futures. I don't know why it's acting like this on the future. I believe just because a new day has been made. But I'm going to go and look at it on the S&P 500 so we can actually see the indicator. So it acts up like that sometimes just because of the new day was created. And if the market was actually closed, it wouldn't be acting like that. But this is what the indicator looks like without it acting up like that on the futures the way it did. But if I were to shift that, take all the markets and everything off the regular spot, you can see the indicator. This is our open for this month. This is our expectation for from the open. So on the regular cash close S&P 500, we're expected 1.58% for this month. And I'm looking at this over 10 years, and our month to date is up 0.3% for this month. And we're right now we're still setting in 80% of our 52-week high, 52-week low range. So that's the S&P 500, and you can see we have this huge volume candle right here. You can see where it's really dwarfed the rest of these volume candles back here. And we had our volatility. That's what this orange around this pink line represents. So, yeah. So I think I had the same support lines drawn out on here as well from those different time periods. Let's go over to the NQ. Let's see if this thing gonna be acting up on this futures as well. That's what it's supposed to look like, but for that reason, it's blinking like that. And I would probably have to go into the indicator and figure it out later on. But let's look at the NQ. NQ, we're expectation 1.27%. Right now, month to date, we're up 1.45%. For the NQ, and April is usually a bullish month. Looking at it over a 10-year period, strong volume, and I'm gonna just go to the QQQ. I'm not gonna take off any of those drawings or anything. But for the QQQ, same process. Up, we're expectation 1.35%, and here we are up 0.6%. And this cyan line right here is where we're expected to end for the month. And this is what we look like. We trade within this range, and we're below our 200-day moving average. This big, thick red line right here. But within our 52-week range, we're 77.82% within our 52-week range. And we're going to go to the IWM. IWM is the NASDAQ. So it seemed to be cooperating on the RT Rider E-mini Russell 2000 futures. So here we are for our futures. Our long-term move average are still green, but our short-term move average, the 1 month and 2 month move average, are actually shifted to negative here. But we've been holding up, bouncing off that 200-day move average. I just used this prior low from the start of last month and use that as support, and you can see we hit it 3 times. One, two, and then 3 if you want to count this candle. But we also had that previous 52-week high back here that was made, and I kind of sort of use that as support as well, or potential support, I should say. April is usually not a good month for 50% of the time it's down 0.15, or it ends the month down 0.15%. But right now, our month to date, we're up 1.39% over our expectation of being down 0.15%. And from our 52-week high low range, we're up 7.62%. So that's all good. And we got strong volume, and but we're still in the negative, or we were in the negative if you look at these red dots, but we turned green here, meaning the buyers came in, and we look at our average, well, it's still saying negative, but it's showing our sentiment is risk on, 68 points to risk on for this one. So I think the last one, I was YM. I don't think I have any really markings on here because I don't pay that much attention to the Dow. But on the pullback, we came back to this 52-week previous 52-week high here. From there, past 52-week high, and then now we're possibly going back up. If we can possibly get through here, I probably look at it on a weekly basis more so. And this is just a real cascade down. That's what it looks like, but I would suggest connecting 3 points. But it's been a downtrend, but we are getting these triangles. These triangles represents wide range candles, which are from high to low, on lower than average volume, and that's what you're getting right here, or volume below, well, not necessarily lower than average volume, but volume below 1 deviation. So we can see these wide range candles on this, and we have low volume right now. This is what it's showing currently for this week, but the week is over, tomorrow's over. So, but we're getting these warning signs, just saying that, hey, you have wide range candles on low, wide range candles. So our true range is above average, but our volume, average true range is above 1 deviation, and our range, let me slow down. So average true range is above one deviation, but volume is below one deviation. That's where these warning signs come in at right here. So the other ones, we'll just go through the different sectors. So first sector, let's go look at our leader XLE. We have our expectation of zero. Or April is not usually a good month, or is it? Yeah, April is usually a good month for our 40% of the time for the last 10 years. For the month of April, we've been up 3.44%. Um, but right now, we're down 0.79%. Here's our open, and here's our expectation. Same situation here. We got two volatility candles right here where range is above. Range are for the volatility here. Range is above two deviations here. That's what causes these volatility candles right here. And here we have a range above one deviation, but volume is below one deviation. That's why we got the orange candle right here. So this is basically telling me that you have volatility in this area just because of what Trump said, but energy is probably not going anywhere. So we had a wide range candle, red candle at that. I'm using my modified buy sell pressure to color these candles. But for the most part, it's energy's not going anywhere. Not while the Strait of Hormuz is closed. We're above all our move averages, way above all our move averages. This orange line is our 52-week midpoint, which is at $50.35, and I wonder if I could do that. So if I were to switch this back over and cut on the other indicator, which is not working the way I really wanted it to work, we can actually see how energy just basically struck off. If I were to, XLE. So energy really just struck off and left everybody at the end of January. And it just struck off and just left everybody from there. And you see that dotted line right there just represents the S&P 500. But for the most part, energy's been our leader. You can see XLB, XLU, XLP, XLRE. All these defensive sectors have really been taken off. And you see for our offense in this indicator, you can see where offense is lower than defense, and it's telling you risk off. And this is just one of my other sector rotation indicators, different view of what's been going on from the anchor point of from the beginning of this year. So I'm going to switch that one back off. It's just another way of looking at things. Come back on the other sector rotation indicator and zoom in. So we can go look across the board at those different sectors. XLE is our leader still, at least for this for the year. So we're gonna look at XLK, see what it's doing. Seasonality from point of view of 10 years. We're actually up or exceeding our expectation 1.7%. Month to date we're up 1.4% for the month. But you also got that same triangle right there. So these triangles showing you wide range candles. Volume is below one deviation, while range is above one deviation. But you can see right here, our range exceeds two deviations, and our volume is below one deviation. So it just gives you a difference, or they're heading in different directions. So it's not a strong push. So you can actually possibly look for a push away from this. Or maybe it's not a strong push or a strong move. You can look at the volumes with the XLK, how volume is still deteriorating, where volume is going down. This wide range candle does not justify that. So I'll call that an irregular body. Really coming from the standpoint of Ann Cooling. If you haven't heard of Ann Cooling, she does volume price analysis. And we're still on the sentiment indicator, we're showing chop. And we'll take it across. So that was XLK. So I really should have started here. Because they're right. So technology to financials, XLF. It looks weak overall, especially when you look at it from the standpoint of its 52-week high, 52-week low. You can see where it's below, or it actually got back above its midpoint for our 52-week high, 52-week low. But it's below the 200-day. The move average, or short-term move average is turned down. Our long-term move average is turned down as well. And you had this huge volume right here, and you're getting the exact opposite here. You got a lot of volume, but the range didn't go anywhere. So volume is above one deviation, but the range, the high-low range, is below one deviation. So it's another indication of you got a huge amount of volume here, but the range didn't go anywhere. So it's another anomaly within price. Because this amount of volume should have got a greater move. Same situation here. When you look compare it to this candle right here, that candle is small, especially when it comes to the candle body. Or if you compare it to, we'll zoom out and we can see this amount of volume compared to 1, 2, 3. And you can see these wide ranges where volume had that greater effect. And you get another anomaly here where you have a wide range on low volume. So I wouldn't expect this move to hold, especially going into the next week. Our expectations is up 1.97% for the month of April. That's what the cyan line right here. But we're still below our open for the month. So we're down 0.54%. And our average volume has been negative. The difference between buy and sell average, so 16.31%, a negative overall for XLF. The next one is going to be XLC, the communications. You have these two volatility candles right here. One going down, but you can also see this triangle right here. So you have a wide range, but wide range candle above one deviation, but volumes below one deviation. Same situation here, volatility. So we're getting a push up, and it actually did hit one of those support areas that I found back here, coming from November. But you can see where we double topped out also here. But I don't think this volatility is over, and I don't think this is gonna hold. Even though we didn't get an arrow, we didn't get any type of indication here, but we still below our 200-day move average, and anything can happen over this long 3-day weekend here. Going to the next one, discretionary, XLY. Here we are below our month move average, so we're below our month open. Again, we had this huge amount of huge amount of volume here on the buy side. You didn't get an indication where the range was. You didn't get any indication of any type of anomaly, but you can see the next day, volume couldn't get back above a 61.8. For the 52-week high, 52-week low, and we actually got like a spinning top right here, so it's indecisive where it's gonna go, but most likely it's probably gonna roll over and come back down. At least that's in my expectations. We're below the 200-day. We're below our move averages. I probably should have been pulling this up the whole time, but where is it? Open. We're inside the previous month as well. So let's move on to the next one. I'm going to get the seasonality back up, and I need to bring that down because of the bubbles. So next one's healthcare. Healthcare. We can look at it from this standpoint of view as well. Healthcare is down for the year. It's still down 5.16% for the year. It's below the S&P 500 as well, our benchmark. So we can see right here we're double topped out right here from this previous 52-week high back here, or I don't know if you want to call it a triple top. So 1, 2, 3, and we basically turned over. You have this huge amount of volume on this candle, which is greater than any other candle besides these ones back here. But you didn't get a whole bunch of, you didn't get a great move. The range didn't justify. You had the same situation here, where you got these anomalies where you got a great amount of volume, but the range between high and low is below one deviation, but volume is above one deviation. And you can see where we just petered out here, where when it did go up, it came right back down. We're below our expected move for seasonality, and we're below our open. We turn to a spinning top right there. Sentiment is negative, and our sentiment here within our 52-week high, 52 low, we're at 58.54, but it's still not looking good. Moving on, we're going to industrials. XLI is green. XLI down here. We're above our S&P 500, so it's beating the S&P 500 for since the start of the year. It's up, what is it, 5.58%. So XLI. Zoom out. And I don't have any levels on here except for this one right here, where it finally broke out. So it broke out at the beginning of the year as well. We got a warning sign, then you had this huge amount of volume, then we went up from there. So our short-term move averages turned negative, but the long-term is still intact. We bounced off our 200-day move average, and that's previous 52-week high low, right? 52-week high right here, this white line. And we had a warning here, and then we had this yellow arrow right here shows us that even though we had a greater close, greater than the previous, no, close is greater than the midpoint of the candle, we still had, my bad, close is greater than the previous close, but the actual close is below our midpoint for the candle. So it's showing you that, hey, even though we pushed up, we had some selling involved, and it showed up the next day. You can see the same situation here. We had a lower close, but our close greater than 50% of the candle, and then we just moved sideways from there. Same situation here. We had a green candle the next day. So it's just an indication if the candle actually closes greater than the previous close, but the close is below its current halfway mark. And that's what you got right here. And then you can see what happened afterwards. You had this volatility candle, and same situation here, where you had buyers push into this, but they couldn't hold it and basically came back down. So XLI, I probably won't be looking for trades in this either. XLI, so industrial staples. XLP, on the other hand, We can come over here in April. We have an expectation over the 10 years is 1.55%, and that's happened over 60% of the time for the last 10 years. On our month to date, we're only up 0.21% from our open, so we have potential to go up. And zooming in, we had this pullback here. We came down to our 200-day move average, and we're above our 10-day, this dash line. 10-day move average here. Our long-term move average is still green. That'll be our 63 and our 84-day move average. And then, but our short term is actually flipped and turned negative. So this bottom half of this cloud peak represents our 21-day, and this top half represents our 42-day. So the reason why I'm looking at it like that, 21 days is a month, 42 days is 2 months, 63 days is 3 months, which is a quarter, 84 days is 4 months, and then of course our 200-day move average right here. So you had all these signals that actually hit right here. Where this one is a lower, you made a lower low but a higher close on greater volume. Same situation here, lower low but higher close on volume. So you got those three things going for you. You had an anomaly here where you have a red candle on greater than volume is greater than one deviation, but the range is less than one deviation. That's where you get this blue square. But you also have a white triangle right here showing that we made a lower close than previous close, but our close greater than 50% of that candle, and this is where we got this green day here. So I would look for trades more so over here in the XLP within our staples. Normally with the staples, I look at Coke and I look at Walmart when it comes to the staples. So our expectation here is 1.55%, and month to date from the open we're up 0.21%. So Coke has looks good for April. 80% of the time it's closed the month at 2.11%. Right now, month to date we're up 0.75%, and within our 52-week range we're at 68%. And right now, sentiment is showing just chop, but it's changing from this downtrend possibly into another uptrend. But it's above its 21-day, but it needs to get above our 42-day, and it found support here along our 63-day or our quarterly move average right there. It's above our 10-day as well. But you have to selling into this as well, but it's above that. So, and then Walmart, WT, you can see Walmart, same situation. For the month of April, is usually up 3.33%, and you can see right here we had about 2-month move averages right here. You had a twist, but our longer range move averages still intact and green, and it's way above our 200-day move average as well. So that'll be Coke, and Coke is actually rising. I've had a good day today, and our sentiment is showing this up. It say risk on, and our average buy sell percent difference is 10.1%. If you use the metric that I use for buy sell pressure, yeah, that's that white line. But the volume has significantly moved off in a way, so that's kind of weird for the volume to, there's one huge bar back here on the 16th. But anyway, this is Walmart. About what I want to do is the XLP. We want to know what Walmart has the greatest percent in this sector. Can I move that over to see what this is? Greatest percent weighting for this sector. I don't know why it's not allowing me to adjust it, but then Costco, Procter & Gamble, and Coke. So we're gonna go to the next sector, And with the staples, then energy. Didn't we already look at? Yeah, energy was the first one we looked at. So we'll go to utilities, XLU. So the month of April, we're usually have our expectations. So 80% of the time we close up 1.33% for the month of April from our open. Right now, we're looking at it going back up. We actually found support at our 63 day move average, and this is the bottom part of this cloud is our 84 day, and our short term move average is still bullish. When we look at the cloud, so top of the cloud 21 day, bottom of the cloud 42 day, and we're above our 200 day move average, and we had this huge wide range volatility candle right here, and we can see from there we're pushed above. You had some selling into this pushback, but then you had this buying, even more buying come in on this candle. You have an anomaly where you have a lot of volume on a small range candle, but we're pushing above. And our average buying is still less than 10%, but our sentiment is above 75.08. So that's Walmart, but you can see where it's decreasing volume. So I mean XLU, my bad. Saying Walmart, but real estate XLRE. Sentiment still saying risk off there, but April 30% of the time it closes up 0.59%, and we're actually up 1.81% over the course of 10 years. It's running had these volatility days right here, one, and then we had this high volume on a small range, and now we have low volume on a big range. I don't think this is gonna hold. We run into our 21 day, run into our 200 day, meeting it right there, and our bottom of this other cloud is our 84 day. So I don't know unless they're gonna lower rates or anything. I don't know about this. I don't know about this for the real estate. I don't have any lines marked out on here, huh? Except for these past ones, because it was trading within that channel. So I would look at something like this. Actually, I would have moved that over. I actually did add this support, but where's that support coming from? All those low wicks on this side, all these low wicks. You broke down, couldn't go any further. That's where you getting this anomaly right there, that blue square. We had a huge amount of volume on a small range, and then you had this pushback above. And then this pushback above was accompanied by a lot of volume, but we're it's at that support. I put on a monthly. Let's go back to that 10 day. And then we that midpoint right there, about 52 week high, 52 week low, and materials XLB. I think that's the last sector. So basic materials turning back up as well, where you see where it actually came down from 54, came down here, and we look. Yeah, it's the start of the year right here. It was just booming up. It's back above its 10 day. Our 1 month and 2 month average turned negative or bearish, but it's having a problem trying to close above its months open or get back above its months open. So in April, we're usually close a month at 2.35%. Month to date, we're up 0.14% on from our open. But you can see this high wick right here. It doesn't look healthy to try and get back into or above these move averages, because it ran right into that 2-month move average right here, and our 1 month has crossed below our 63-day period move average as well. So I would look at chop, and this is not going anywhere soon. So those are our 11 sectors. Yeah, we went through all those, and this is what it looks like for since the beginning of the year. This VIX is still elevated. Looking at the VIX for the last 10 years, you're not going to get any volume on this instrument. But the month of April is usually down, or ends the month of April down 1.27% from its open. But it's been elevated, especially from the beginning of the year until now. But it had a wide 52-week high, 52-week low range as well. We got crude oil. Crude oil up for the year 95.19%. The dollar, the retail, home builders, biotech, pharmaceuticals, semiconductors, transportation, software, and these are like the credit deals right there. But as far as cyclicals, defense, and growth, defense is leading growth. Growth is continuing downward, and the cyclicals. But one of the things about these indexes, RTY is still leading the S&P 500, so it's still the growth sector. Still leading the market. Here's our Russell 200 ETF. It's not as down as much as the S&P 500. And usually April, 60% of the time it closes 0.67%. This is our volume. So yeah, even though the average volume is, the difference between buying and selling is 21.34%. My only course of concern right here, because the move average is crossed below. So both our move average, short-term move average, our 1 month, our 2 month cross below our 3 month and our 4 month move averages right here. So I don't know. I wouldn't be looking for trades in this either. And you can see how we have this wide range candle, but this below average volume. So to me, this looks more like a trap. You got this wide range candle, however you want to look at it, even though the signals indicator and showing that on this much volume right here. So no sir, no thank you. This is pretty much going to be the end of the video. If you haven't already, please like and subscribe. I appreciate you guys taking the time to listen to what I had to say. If you're interested in the indicators that you see on the screen, just go to my shop. This is a part of my sector rotation script bundle, and this is part of my seasonality bundle. But I think I made this a part of my sector rotation bundle as well. But that's a look across the market. Like I said before, I hope this was helpful. If you haven't already, please like, subscribe, or comment, or if you have any suggestions. I appreciate you guys. Stay safe. I did want to go through the scanner. So right now I have this scanner set to the Russell, but I'm going to set it to energy. Was it energy? No, I think it was staples. And I have it set for my volatility. I got it set for 13. I should have had it set for 21. This is why scan results came up to be. Look for volatility bars within three bars. So LW, this one has the greatest percent. LW had the greatest percent change. So LW on the day anyway. We had earnings right here. I guess they didn't have good earnings. You had a wide range volatility bar right here, but it's still, dang, it's below its 200 day, and it's made a new 52-week low, so that's not going to be an option. HSY, Hershey and Company. This is a greater potential, especially because it had this pullback, and for the month of April, it usually ends at 1.74%. That's right here, but I believe it can go higher just because of the, it's Easter and a couple of different other things going on, candy wise. I think I've seen on the news. No, that wasn't them. But anyway, you can see where they try to push it down. You got this the warning sign right here, and then you got this pushback above. So I think this can go back above. We can go to Flowers Foods, so FLO. No, we're not going to be messing with this one. I guess I should have changed the parameters. But, like I said, it's making a 52-week low. Let's see, was it after earnings? I don't see any earnings or anything. But I don't like things making new 52-week lows. We can go to MKC. Same situation there. We're gonna leave that alone. We're gonna intersect this with something else like energy. You got a whole wide range of different things here. You want to screenshot this? I'm just gonna move it up a little bit. And SKYQ. Volatility candle. I probably won't mess with this one just because I don't know. It's coming up off its 52-week lows. So, but I don't like those spikes, and you see that over and over again, especially when you drop it down to that 15-minute. It probably was a good play here. News. There's the news. Brent crude pressure, whatever. And we can go back to the scanner. Loud. LODE. And we're going to take this back to the daily. And we're going to put this on a 10-year, back on our 10-year day. This one isn't looking too good either. I actually probably played this one with all those drawings and stuff on here. No, it's just trading within this range. HPK. You had your volatility candle here, and then we push back, and now we're trying to push above, but that yellow arrow showing they're selling into it. That this is more interesting because you can almost see the cup and handle, or a cup is pushing back above into here, but we also got this yellow arrow here on this huge amount of volume. So push down. This is balance. That's what this gray candle is showing you, and that's what this was showing you too. Buying and selling on here, or the buying, the close is the same as the midpoint of the candle, basically. And basically that's why it's a gray candle, even though it's showing red down here. It's a gray candle. But anyway, balanced candle right there, and then you pushing back above its 10-day, and this one's it's above all its move averages. So I would look for that one, and I look like I probably played this one before. But these some of the names where you can go over and look at from that have volatility within these last couple of days. We can go look at this one. This is a range break. SOBO. SOBO. This one doesn't look bad. It's like it pulled back into this area, and it could possibly go on up. But April is not a friendly month for this one right here. GNRC is one of the ones. Generate has a April. Usually it's up, but it's usually it makes this move right here where it's up these next couple of months, and you see it has some great percentage for May, June, July is its highest percentage right there, up from its open, 11.77%. So this is another play as well. But I thought April was a good month as well when it really gets started. But April may not be the month for it. But this is gonna be the end of the video. I wish you guys the best. Take it easy. Have enjoy your weekend.